In this presentation, we'll take a look at filing status for the Federal Income Tax Code, the filing status including things like single and married, married filing joint, head of household. For more accounting information and accounting courses, visit our website at accountinginstruction.info. When thinking about the filing statuses, we want to look at it from the angle and ask the question as to which filing status would result in us paying the least taxes, and then how could we qualify for that filing status. And if we think about it in that sense, then we know that, for example, single will typically result in paying more taxes if we have the same taxable income than, say, married filing jointly, because single will have higher tax rate tables applied. However, that doesn't mean all the time that it is beneficial for two people to get married as opposed to filing single, because it really will depend on the situation. What it does mean is if we had the same amount of income for single and married, then filing single would be the worst because you're going to have the higher tax rates. Of course, when we do file married, then oftentimes we don't have a single income family anymore. We've got two incomes a lot of times, and that could skew the results. We also have credits that could be refundable types of credits that could actually get money even if we're not paying any tax. And those are types of instances that those could include like an earned income credit and a child tax credit, for example. And when we consider those types of credits and the phase outs, we got to consider if there's going to be areas or situations where filing married could be a detriment then in terms of taxes, in terms of the tax code, than if we were to file single. So just keep that in mind. We're looking at it and we're thinking, well, filing single's the worst in terms of total income because you'll have the higher tax rates. However, if you're two people that both have income and get married, then you have to consider that on a case-by-case basis. So if we go to the single, we're going to say that not married as of the last day of the year. This is the default position. If you don't qualify for anything else, then of course you'll be single as the default position in the tax code, and once again typically have the highest rate applied to it. The married filing jointly, often abbreviated MFJ, will be married as of the last day of the year. So all you have to do, to qualify, if you did tax planning for when to get married or something like that, you may want to think about, well, is it going to benefit us or not benefit us? And hopefully most of the times it does. The tax code tries to make it kind of neutral, and it's a difficult thing to do because it used to be that there was a one income household, and if there was only a one income household, it would be kind of easy to think about what would happen when you get married. But now that there's a two income household, then there's a huge amount of variations that could happen from being single to being married. Circumstances could change a lot, and it could change a lot from low income to high income. So a lot of the thresholds could change. So it could very well be worth doing tax planning to see, if it's tax advantageous. And if you get married, if it's advantageous, as long as you get married by the end of the year, then you can file at the married filing jointly. If it's not advantageous, maybe you want to wait till January of the next year to get married. And then we have the married filing separately, or MFS. Don't get the married filing separately it's confused with the filing single status. In other words, it's possible to get the mindset that we don't need to do tax planning when getting married, because if the taxes come out to be non-advantageous for us, then we can just file married filing separately, and that'll be similar to the single status. That's not the case, because the married filing separately, although may have some characteristics to the single status, it usually doesn't have all the characteristics of the single status, and you want to be careful of things like credits and whatnot under the married filing separately. It could also be different from state to state. So just remember that most of the time, if you're married, you're going to be better off filing married filing joint almost all the time. There might be some circumstances where married filing separate might be the case. And most of the time, if you're a single individual and thinking of getting married, then married will result in a better situation, or at least an equivalent situation. But there are circumstances where that may not be the case. Then the married filing separately, married but electing to file separately, so we're making that election. You can only take the standard deduction if both make the same selection. In other words, you can't have one tax return take all the itemized deductions and the other tax return take the standard deduction, because then you're kind of doubling up between the single couple. Because remember, for married, what it means to the IRS is like you're one entity for taxes. So now you're like one entity for taxes, but you're filing two separate returns. So, and then usually not advantageous for a couple to file married filing separate. So it usually is not the case. It's more often advantageous for two singles to stay single than get married. And I'm not saying the tax code should stop this or that, but I'm just saying it's more that could happen, more possibly happen. It's less likely for married filing separately to be more advantageous once married than filing jointly. Then we've got the head of household status. Now this is going to be better, and you can compare it, of course, to the single status. I mean, if you're married, you're married. It's pretty clear if you're married or not. If you're single, then the question is, well, can I qualify for head of household status? Why would we want to do so? It would change the tax rates, and it would also typically mean that you have a qualifying dependent, which will also affect the taxes. So this would be a step up from single as far as, paying less taxes would go. So that would be unmarried at the end of the year. So as long as if we're unmarried at the end of the year, again, the timing thing, when might like a divorce or something take place? From a tax standpoint, you can kind of do some planning in terms of when that should take place. You've got to be unmarried at the end of the year if you're going to file head of household. U.S. citizen or resident, maintain a household for a qualified person for more than half the year. So we, in essence, need to have a dependent, and dependent means that we're maintaining the household for more than half a year. Except parents can live in a separate household. So parents, elderly care, because of that would be the case, the reasoning. Elderly care could be living in a separate household. Then we have the qualifying widow or widower with dependent child. And this is going to be a special case or special filing status for those who have lost their spouse. And it's going to be a step up from the single or the head of household. So if we're a single individual, then we would think, okay, first, can I qualify as the qualified widow or widower if I'm in that special situation where my spouse has passed away? Or if not, can I qualify as head of household? And if not, then of course we would basically be single as the default, which would be the worst, kind of filing status in terms of tax code position. So that would be for 2 years. The qualified widow or widower could be there for 2 years after death of the spouse, must be eligible to file a joint return the year the spouse died. So in other words, you were legitimately married and therefore able to file a joint return under the rules of filing the joint return in order to then qualify for being a qualified widow or widower. We cannot be married in order to file for a qualified widow or widower. If we were married, then we basically have to file as either married filing joint or married filing separate. And then we want to pay for more than half of the cost of the household that is the principal place of residence of the taxpayer and child for the entire year. In other words, we basically have to have the child dependent in order to qualify for this filing status. For more accounting information and accounting courses, visit our website at accountinginstruction.info.